A reverse mortgage might sound like a great way to generate income in retirement, but they're tricky. Here to tell us more about them is real estate attorney Ben Weinstock. What is a reverse mortgage?
The best way to understand them is to compare them to the regular mortgage that you and I are familiar with. We typically think of a regular mortgage as the borrower going to the bank, signing some papers and getting some cash back, and every month you repay the bank a little bit. With a reverse mortgage, most of them work by going to the bank, signing the papers, and having the bank give you money each month, so that it's like having a line of credit at the bank, so to speak. But they're limited. They're not available to everybody. They're only available to people who are 62 and older. They're only available for the primary residence. So if you have a summer home or a vacation home that you want to try to mortgage this way, you can't do it that way. And they're more costly typically than conventional borrowing.
There also are some real pitfalls to them too.
Nothing is ever all bad or all good, and same with reverse mortgages. There are some pros and cons and some very, very significant pitfalls. What's good about them is that you don't need income or a good credit score to be eligible. The loan is underwritten or originated based on the value of the property, the life expectancy of the homeowner, and the amount of the underlying first mortgage that exists on the property. So for people without good credit, for people without any significant source of income to repay the loan, it is a better product, or perhaps the only product. The dangers are that they're more costly because they have a compounding of interest factor. They can even result in the disinheritance of the children. By that I mean the following. Every month the interest will accrue on that loan until eventually the amount of the debt could exceed the value of the home. Nothing left for the heirs and the family to inherit after one passes away.
So what are some alternatives if people, see their home as their greatest asset, they need the income in retirement? What are some other options?
Generally speaking, we recommend to clients that they consider downsizing either into a rental property or into a smaller home. They sell the 6-bedroom house they've had for 35 years and move into a small condo, if that suits their lifestyle. The alternative to that is to refinance the existing mortgage on the property, pull some cash out that way, as long as you have sufficient income to be able to afford to make the monthly mortgage payments.
I see. So you have to make sure you qualify for that kind of a mortgage
Correct.
setup.
Not everybody's eligible and can qualify. You need to have good credit and a source of income.
Well, thanks for the advice and for warning us about those risks with reverse mortgages.
Thank you.